Welcome to The Explainer. So today, we're tackling a pretty wild question. Why would a $4 trillion global industry go out of its way to sound like it's failing? It's a fascinating look at a huge identity crisis happening right at the heart of finance.
Okay, let's get right into it. We are talking about Islamic finance. This is an industry with $4 trillion in assets. But, if you read its own marketing material, you'd swear it was some tiny, struggling startup. The language is so defensive, almost apologetic. So what's going on?
And it all starts with this one little phrase: despite Shariah constraints. You see this everywhere in reports and research. Shariah, which is Islamic law, just lays out some basic principles for finance, right? Like avoiding interest and pure speculation. But this one phrase, despite constraints, immediately frames the whole thing as a negative, as a limitation, instead of a strength.
So yeah, this takes us straight to what the source material calls a self-sabotage playbook. The industry has kind of become its own worst enemy by clinging to a story about itself that is just decades out of date.
And here's the thing. This whole defensive mindset has its roots way in the past. A lot of this talk about constraints comes from research written back in the early 2000s. Back then, the industry was a tiny fraction of what it is today. Products like sukuk, which are the Islamic alternative to bonds, were barely even off the ground.
Just look at the language here. Imagine you're an entrepreneur, you need funding for your great idea, you pick up a brochure and you just get hit with this wall of negativity. Limitations, constraints, challenges, lower returns. It's just not a winning pitch, is it? Exactly. It's a totally fair question. Why would anyone choose this? The marketing seems almost designed to turn people away. And what that's done is create this massive disconnect between the perception that Islamic finance is difficult and unprofitable and the reality of a booming global market. All right, so let's get to that reality check. Because while the story might be stuck in the past, the numbers tell a completely different story, one of explosive growth. $4 trillion. Let that sink in for a second. That's the current asset value of the global Islamic finance industry. That is bigger than the entire GDP of a country like Germany. We're not talking about some small niche player here. This is a global powerhouse. And it's not slowing down, not even close. Projections show the industry is on a rocket ship, on track to hit almost $7 trillion in assets by 2027. That kind of momentum is just incredible. And this isn't some far-off prediction. To give you a taste of what's happening right now, just in the first 3 months of 2024, there were over $65 billion of sukuk issued. This is a dynamic, thriving market today.
And check this out. It just shows the global appeal. You've got these huge, mainstream financial hubs like London and Luxembourg structuring Islamic funds and sukuk. And you know what they're not doing? They're not using all that apologetic language. They just see a valuable product that meets a real market demand. Simple as that.
Okay, so this brings us to a really cool idea, a total reframe. What if we've been looking at this whole thing completely backwards? What if these so-called constraints are actually the industry's most powerful competitive advantages?
This timeline really lays it all out, doesn't it? The world today is a completely different place than it was when those old apologetic papers were written. And the 2008 financial crisis? Wow. That was a massive wake-up call that really highlighted the incredible built-in stability of the Islamic finance model.
So here's the big reframe. It's about turning the bugs into features. That rule that every transaction has to be backed by a real, tangible asset, well, that's just smart, built-in risk management. Those ethical screens on what you can invest in? That was basically ESG before ESG was even a buzzword. And that so-called compliance burden? Turns out it's a great way to make sure money is funding actual economic activity, not just wild speculation. And if you need any proof, look no further than 2008. While the conventional financial system was melting down, needing trillions in bailouts thanks to toxic derivatives, the Islamic finance sector was remarkably stable. That limitation on asset backing acted like a natural shield. It wasn't a bug, it was a guardrail that actually worked.
And here is the kicker. These features are exactly what modern investors are looking for right now. You've got pension funds desperate for stable asset-backed returns. You've got huge infrastructure projects that need patient, long-term capital. And you've got this explosion of ESG-focused investors who demand ethical structures. Islamic finance delivers on all three.
So, what's the big takeaway from all of this? Well, it's actually pretty simple. The product isn't the problem. The story is the problem.
The industry really needs to stop apologizing. It needs to stop preaching. Clients aren't looking for a philosophy lesson.
I love this quote from the source material. The solution is just to show people the practical value. Show a pension fund how asset backing gives them stability. Show an ESG investor how the structure already meets their ethical mandate. It's about solving real-world financial problems with the mechanics of the product.
And that really just leaves us with this final, really provocative question. It's a challenge, right? It's a call to action for a $4 trillion industry to finally shed this old apologetic story and start telling the one about its incredible success.